Hi everyone, Steve Willems here with Asante Wealth Management in Abbotsford, interviewing today Denise Carroll-McLean from Dream Approved Mortgages, talking about some of the implications of this COVID crisis on those with debt, mortgages, refinancing, repricing, that kind of thing. Stay tuned. Thanks so much for joining us here today, Denise. Excited to have your expertise delivered. When we were thinking about kind of designing this, we were wanting to give value to our clients, but specifically the kids of our clients who might find themselves in a trickier position here with this pandemic. If you've got a mortgage and you're not sure about whether or not that's the right mortgage or if you should be paying a lower rate of interest, all this stuff, just a lot of questions. So thanks so much for your time today.
Yeah, and thanks for inviting me. Happy to be here.
Awesome. So I figured maybe what we should start with would be just a summary of kind of what's brought us to this point. Rate changes, kind of what's happened in the past.
Yeah. So obviously what we've seen of late with respect to this pandemic is just our markets respond, consumers respond with panic, with, and that has an impact, of course, on our bond and equity markets globally. So we have two drivers on our mortgage rates. One, with our fixed rates, those are driven by what we see happening in the markets, in the bond markets specifically, and the bond markets are affected by what everybody's doing with their portfolios and equities and bonds. So that's the one side of things, is the fixed rate. The other side is the variable rate mortgages. And the driver of our variable rate mortgages is what's happening with the prime lending rate in Canada, or what the Bank of Canada is doing with their key overnight lending rate. Both of those in the last, sort of couple of months, month and a half for sure, we've seen everything decreasing, dropping. Specifically, Bank of Canada's overnight rate, prime rates dropped 1.5%. That we've seen sitting at 3.95% since the fall of 2018. So not only was it the first increase, but it was three massive decreases of 50 basis points each, taking us to where we are today at 2.45.
So let's paint that picture. I mean, I got my mortgage statement in the mail a couple of weeks ago. My new, I have a variable mortgage. My new rate that I'm paying is unbelievably 1.5%. So I saw for, Amber and I's situation, a reduction of almost $500 a month as a result of that being on a mortgage rate, a variable mortgage rate. So let's kind of paint the picture then of, a pretty simple situation, a young family, they've got a mortgage. What would be a couple of things that they should be looking to do in a season like this to either take advantage of these lower rates or to simply survive and navigate through the crisis?
Yeah, so what we're seeing, everyone's circumstances are so different. And if I can sort of categorize it into sort of three areas, we've got families that are having a tremendous financial impact, either loss of both incomes or a loss of one income in the household. We've got those clients whose mortgages are perhaps up for renewal now, or maybe sometime in the next coming months. And then we've also got those that are just concerned about, am I in the right product? Am I in the best rate? Is there something that I can do right now to reprice that? Or is there something I should be doing preventatively to prepare for, perhaps a sustained period of time that could eventually have an impact on my finances? So with those that have had financial impact, there's several options available to them. They can defer their mortgage payment, they can stay with what they have, or we can simply look at restructuring what they do have if income permits for them to do that. For clients where your mortgages are coming up for renewal, or you're in question about, do I have the best rate? How do I take advantage of this? That's really simply a conversation and being prepared, so that we don't ever have to be in that position where it's like, well, fingers crossed, hopefully when my mortgage comes up for renewal, these rates will be here, or so there's ways for you to participate on those rates now today. We just need to take a look and see if it makes financial sense, if the costs are outweighed by benefit of decreasing your overall interest costs.
Right, and I guess in other cases where you know, a family might have outside debt, like maybe a car loan or something like that, you know, not uncommon. Potentially consolidating some of that debt might be another option that they might want to explore.
Yeah, absolutely. And I will point out right now, what we really need to be cautious of is there's a lot of sort of predatory second mortgage products that come popping up on the news and in marketing and certainly in calls. One of the greatest assets we have is in our homes, and there's certainly ways to leverage that, particularly where right now liquidity is a bit of an issue. Perhaps investment portfolios have come down a bit, and savings that we thought we were going to access over the next year now maybe aren't going to make so much sense. So we need to take a look at how we can leverage the equity in your home to take care of that, and at a very low rate of interest as well.
Right. So for those that find themselves in a harder position where potentially, you know, the costs might not outweigh the benefits of them doing a refinance or a reprice right now, what type of response have we seen from the lenders to accommodate borrowers through this season?
Yeah, so there's a little bit more caution being exercised, of course, with incomes. If we're going to be looking at refinancing your mortgage, that nothing has changed with the fact that your income still needs to qualify you for the financing that's in place. So if there has been a change to that at all, then that's just something we need to take a look at and see, are there options for us to defer, or perhaps there's enough income in the house for us still to take care of that. If nothing has changed there, then it's just a matter of us assessing your current status on your mortgage, what you're paying, what your plans are, what your goals are, what changes you've got upcoming, and then take a look at consolidating some of that stuff and using the equity in your home.
Now, if you've got an existing mortgage that you're servicing, but you're having a problem with getting some of these payments through, there are payment deferral programs as well that have been made available from a lot of these lenders as well. Is that correct?
Yeah, all the banks, all the lenders are offering payment deferral. Now that's taking a little bit of patience. Our lenders have seen in general a 400% increase in daily call volume. So calling your bank or your lender today could result in a 3 or 4 hour wait time for you just to get into the queue. And I'll mention there too that those programs are available. They're fantastic and can really help get you through a pinch. But I would suggest before you jump on that you talk to a mortgage professional. Certainly if you've got a mortgage broker or someone, I welcome calls all the time just to have those open chats, regardless of whether you're a client of mine or not, and see if it's something that makes sense for you, or whether you've got some other resources perhaps to help you through that time. Because the call volumes right now, the banks are asking that if you are in a position right now today of needing to defer that payment, that need is, you know, for example, May 1st right now, then that's something that you need to do. If it's just, wow, I'm having some concern that maybe in 2 or 3 months, that might be something that I need to take advantage of, let's just talk about that and not wait on hold in a queue in the bank for tying up time. So,
right. So
yeah.
one other case, I guess, and we didn't necessarily talk about this before our call, but we do find it from time to time where some of our clients might be landlords of multiple rental properties, and they're now facing some challenges in terms of collecting rent, obviously,
Yeah.
as you would expect. So certainly we've got the potential $500 subsidy coming from BC Housing for families who find themselves unable to make their rent payment. I think it goes down to $300 if it's just a family without any dependents, and they're having a problem paying their rent. But what would be some kind of any financing strategies come to mind in the case of you being a landlord of multiple rental properties, and not necessarily being able to collect rent on some or all of those properties?
Yeah, so I mean, typically, if you're in a position like that where you are holding multiple properties, you've got some resources. In the last few years, lenders have been very, very cautious in the rules have really tightened on purchase of rental property. And this is why, because if you get into these sort of unanticipated situations where you're really dependent on rental income to make mortgage payments happen, it can create problems. If that landlord is in a position where aside from their rental income, they are still generating their business income, there's options there for lines of credit being set up. There's certainly options for businesses with the banks, RBC, CIBC, all the major banks are offering some relief to their small business clients for loans and lines of credit. So,
And I suppose another option that the landlord might consider would be putting a deferral on all of the properties, seeing which tenants ended up paying them, and then doing lump sums against all of those properties just based on that total pool of rental income that might come in. You got creative solutions to the problem, right?
Yeah, deferral of payment is always the option there. The only thing I'd like to say is let's just chat about it first and see if there's anything else. But that's there for a reason, and it's there to fill that need for sure if other options don't exist.
Awesome. So I guess my kind of takeaway from this is much like a lot of the work that we're doing on our side, so much of this is situational. It needs to be reviewed with someone who understands the nitty-gritty details of it. You're a good option, and kind of taking that next step to just have that conversation, see if there's anything that needs to be done.
Yeah. And sometimes even our clients are, everybody's really focused on debt reduction and mortgage repayment. And oftentimes you're set up on an accelerated payment, or you're set up on a biweekly payment, which you don't even realize is accelerated. And there's an opportunity for us even just to get that reset. If you're on a weekly repayment, we can set you back to monthly and slow things down a little bit, or make recommendation to cut back on prepayments.
Yep, and I guess there's the saying, when you're inside the fishbowl, you can't see the outside. And I guess so often in our own situations, when you're inside your own situation, you don't necessarily see the opportunities that you might be able to take advantage of. So I appreciate.
No, that's absolutely right. Yeah, you don't know what you don't know. And so I love just to have clients call me and say, here's my situation, here's what's comfortable, here's what's not comfortable. Let's take a look at it overall and see if there's anything that we can do to mitigate some of the risk, and certainly to prepare in advance for any, this has taught us that we do need to be prepared. We do need to have resources, and planning your mortgage is what we totally have control over. And I think sometimes consumers feel like, well, they're backed into a corner. Here's their mortgage. This is their option. That's all they've got. And now they just have to wait and see. And that's not the case at all. We do annual reviews with all our clients, and this is precisely why we do it.
Awesome. Well, thanks so much for taking the time here today, Denise. Certainly appreciate your insights.
Yeah, thanks so much.